Well, it finally happened. What everybody's been waiting for is Jerome Powell and the Federal Reserve just slashed rates by 50 basis points. We're going to discuss how this affects our real estate market and what that means for you and your family. We're going to go over a few key points here to really help you and your family make a decision on buying real estate here in Dallas-Fort Worth. First, let's see if the Fed funds rate, which was just cut by 50 basis points, actually affects mortgage rates. As you can see here, it's not necessarily correlated, right? We have places where the Fed funds rate in the red line spikes, but yet rates hung in the 5 to 6 range. I think we're headed somewhere in there, between 5 to 6.5 somewhere, but I can't see the future. I don't know, right? Nobody knows. Not even the Federal Reserve, or they would just put rates where they need to be now and they would hold them, or they would move them. If they have an idea, they're going to gradually move them. The purpose of them moving them is they have to balance between inflation and job losses. And right now, they think they're curbing the inflation, so it's time to start cutting rates to prevent job losses. Let big companies start borrowing money cheaper, banks start moving money around, right? Now, we'll see how this goes. Again, nobody has a crystal ball. But for your case, if mortgage rates are definitely a factor when you're purchasing a home, I would not rely on this. Now, in time, if rates are going to fall, the 10-year Treasury yield, which usually does, the 30-year follows a little closer, will move with it, okay? But it's, again, not exactly correlated. So my advice is do not make any decisions for you and your family based on the Fed fund rate, okay? Number one. Number two, let's see how the Fed fund rate is correlated along with national house prices. Let's check this out. Okay, this is really going to help us see Fed fund rate, housing prices. As you can see here, Fed fund rate in the 80s before, we had a couple recessions in the 80s. We got as high as 15, 18 for the Fed fund rate. But if you see home prices, they were steadily staying even but slowly growing. You'll see here, Fed fund rate coming down, housing prices going up. So what does that tell us? It's not exactly correlated. We had this peak here. What was this? 07? Yeah. So in 07, financial crisis, bad mortgages, not the same scenario we have now. Also didn't print trillions of dollars like we have now. So this environment is new, I think, to everybody involved here. But so 07, again, look, they crash rates to try to stimulate the economy, right? We were going through a crisis, hit that recession, came out, but it took us, this was, let's say, February, March of 07 to 2016. When people talk about, oh, housing prices always go up, they like, and same thing with stock market, they like to leave out these decades, right? The lost decade. They like to leave out these decades where home prices had to recover, okay? That is possible, all right? Now, again, not exactly correlated, right? I think housing, the one crash we've had was to terrible mortgages, people getting 2, 3, 4 mortgages with no income, no assets, just handing out these mortgages again to, the housing prices went crazy, people that couldn't afford them, people having rentals that had no business buying rentals, and everybody lost it, right? They sold these mortgage-backed securities and just everything tanked along with the banks, right? Now we're here, right? All-time highs. Let's go look at our prices. We hit all-time highs in May this year, beating the 2022 high, came back down. Again, we're going to make this pretty short and sweet for you guys. As you can see, the Fed slashing rates, it doesn't necessarily affect mortgage rates. Now, in time, when they continue to lower rates, the mortgage rate should trend down with these, but they've already priced in this. That's why they're at 6 right now. Here, let's go back and show you this. Okay, so again, mortgage rates. Now let's check this out. Mortgage rates at 6%, and we haven't been there since early 2023 and 2022, right? The fact that our market held with these close to 7% for the most of the year, and where we hit all-time highs, tells us prices are holding strong in our area, right in Dallas-Fort Worth. If you're looking to move and you're looking to purchase a home, and it's your first home, only buy, my advice, if you're going to stay there 5-7 years. Don't buy a home if you're going to be there 1 or 2 years and you may have to move for a job, unless you can hang on to it for a rental. Now, if you make good income and you can hang on to it for a rental, now that's a financial decision that might be worth making. For families that are looking to move up in homes, most of you are probably in a good mortgage, under 5% by the data, a lot under 4% actually by the data as well, over 50% of you. For you to move up and get that square footage, it's going to take a hit on that monthly payment, but again, you got to go to quality of life, etc. And again, same advice. If you are going to be there for over 5-7 years, or you want your kids in this school district and you're playing, of course, life happens to all of us, but if you're playing 5-7+ years, I say we're getting close to that point where you can make that trade, and yes, you're going to lose that rate. Even better, if you can hang on to this and you start stacking cash to put that 20% down for your next home, and you can save this starter home you're in, you're setting your life up for a good future right there, right? You're going to have a good asset, generate income likely, because you probably got a payment that you're actually going to cash flow with those low rates. In the end, what's really my advice here? 1, nobody knows what the future holds. 2, 5 to 7 year plus plan. If you're ready to move, best time to buy November to January, right, which is right around the corner. Best time to sell your home, always spring and summer, or trade in that same market and get a win on that buy, right? We just had a beautiful home in South Lake, rare property, 2.2 million, got it for 400,000 under market. Okay, I'm probably gonna make a video on this, share with you how we actually do this, the process, the things that are actually really vital to getting something like that done. Saving 20% on a house. It's not like it's a true 20%. The bank, he can go get a loan right now, and he's got 400,000 equity day one with 0 down payment. Obviously, he's got down payment and everything, so he's probably around 40% equity with the cash he's put into it, correct, for that down payment. So those things are possible. If you're looking to relocate, I'd buy in the winter, because more demand. After Halloween, that's when demand falls off. Like the listings I have coming up, we're trying to get on these things under contract before Halloween hits. Obviously, life happens. People need to list at certain times, and if you can control it, get that thing listed well before Halloween. Okay, if you cannot, get it listed, price aggressively, because demand is going to drop going into the winter as seasonally. So this Fed fund thing, everybody's making a big deal out of it. Really, what makes it was supposed to be a 25% cut according to the markets up until 3 days before they cut it. I've never seen a swing like that. Okay, so it's really interesting what's going to be happening here over the next year, 2 years. I'm thinking, what are they seeing to do this half now? I know they slashed rates real quick, and then they rose them really quick last time, and now maybe they're going to bring them down real quick again to the 3%. I don't know. We'll see, because it takes time for all this to actually hit the markets, hit economies, and it's going to be an interesting 2 years, I can tell you that. If you would like any help on finding your next home or selling your current home, obviously text me home below, and thank you for joining on this, and we'll see you on the next one.